Okay, good afternoon. Welcome everybody to another webinar session, the 10th in the webinar series for STL. Our webinar today is titled The Nigerian Commodities Market, Opportunities for Aspiring Investors. And today we have a very distinguished it's safe to call him a professor, a doctor with us today, to take us through this topic today. We promise for it to be very engaging, very mind-blowing. I've looked at the slides ahead of this session, and I can say that you'll be very well entertained. Before we jump right into it, and like I mentioned earlier, welcome everybody, and thank you for being our frequent attendees to our webinar. So we will jump right into it. But before we commence today, and before I introduce our special guest, I would bring to the mic the Managing Director and CEO of STL Trustees to give us a welcome address. Good afternoon, ma'am. Are you with us, ma'am?
Yes, indeed. I hope I am audible.
Yes, ma'am.
All right. Thank you very much, Mr. Ahmed Banu, Leading Director, STL Asset Management. Good afternoon, our esteemed clients, esteemed stakeholders, and friends of STL. My name is Fumi Ekundayo. I'm the Managing Director and Chief Executive Officer of STL Trustees Limited. If you call me your chief host for this webinar, you wouldn't be wrong. So I warmly welcome you. I'm truly honored and privileged to welcome you to the webinar. Like the MD of the STL Asset Management has already mentioned, the topic that we shall be dissecting this afternoon is the Nigeria commodities market, opportunities for aspiring investors. This is the 10th in the series of STL webinars, and this is an attestation to our organizational commitment to constant client engagement and productive investor education. The topic of our webinar today also underscores our unyielding passion towards ensuring that our esteemed clients, such as you who have joined us on this webinar today, have useful information that would provide you with the necessary guidance you require to always make informed investment decisions. Today, we shall be exploring the secrets to lucrative investment opportunities in the Nigeria commodities market, and also to discuss the numerous opportunities available for inspiring investors and all investors in general. Let me use this opportunity to welcome our esteemed guest speaker, Dr. Afolabi Oluokere, who is a seasoned economist. He was formerly the head of economic research and policy management at the Securities and Exchange Commission, and also a research economist at the World Bank. A more detailed abridged version of his profile would be read at the appropriate time. I have no doubt that Dr. Oluokere's robust knowledge and expertise will surely enrich our discussion today and also provide us with invaluable insights into the Nigerian commodities market. Throughout today's session, we encourage insightful discussions, and I invite each participant to actively engage with our esteemed guest speaker and also share your thoughts via the chat box, and also by expressing your views or asking questions during the time allotted for questions and answers. Without further ado, I would like to hand over again to our moderator, Mr. Ahmed Banu. I thank you once again for joining us today, and I'm very confident that we're going to have very robust discussions that will be both educative and impactful. Thank you once again for joining us, and sit back, relax, and enjoy the webinar. Thank you.
Thank you very much, Ma. It's always a pleasure. Thank you for being our host. Apologies, I did not introduce myself earlier. I'm Ahmed Olaitunbanu. I'm the Managing Director of STL Asset Management, and I'm also the moderator for this webinar today. So to move forward on the agenda, Just to do a bit of house rules, pending when I introduce our guest speaker today. So kindly make use of the question and answer chat box as mentioned by Mrs. Fume Kundayo. Please, for every questions you have, you can put them in the chat box. And when we get to the question and answer session, very much after the presentation, we would ensure that we touch on every question that has been asked. So today we have our very distinguished guest to make a presentation for us. But pending when we introduce him, we would like to have a quick poll question. It won't take so much of our time. Pretty much within 2 minutes, we would have the poll up and we would want you to answer the poll ahead of our introduction of our guest speaker. Kindly have the poll up so we can quickly look at that. Okay, thank you very much. So the poll is, have you ever invested in commodities? Yes or no? So we would like the attendees to please take on the poll. Okay, if you haven't, would appreciate 1 more minute. Kindly take the poll. The poll is on the screen. Okay, given the results, we have 80% of our attendees haven't invested in commodities before, while 20% have invested. We expect that at the end of the presentation by our guest speaker, a lot of us will be very much interested in investing in the commodities market. And we look forward to having that interest grow after this presentation. So just to jump right to it, thank you very much. So we would introduce our guest speaker today. Our guest speaker is Dr. Afolabi Emmanuel Olookere. He is the Managing Director and Chief Economist of the Analyst Data Services and Resources Limited, ADSR. Before now, he was at different times the head of economic research and policy management at the Securities and Exchange Commission, Nigeria, a research economist at the World Bank, the head of economic research and publication at the Financial Derivatives Company, and a postdoctoral research fellow at the Center for Economics and Allied Research, University of Ibadan, Nigeria. Dr. Olookere holds a doctoral degree in economics from the University of Ibadan under the African Economic Research Consortium sponsored collaborative PhD program, CPP, in Sub-Saharan Africa. He also teaches at the Central Bank of Nigeria's collaborative postgraduate program in the Department of Economics, University of Ibadan, in addition to being a senior faculty member at the Nigerian Economic Summit Group, NESG. Dr. Olookere is an associate of the Chartered Institute of Stockbrokers, a member of the research committee of the Chartered Institute of Bankers of Nigeria, and a member of the Productive Capacity Index, PCI Statistics and Technical Task Team of the United Nations Conference on Trade and Development, He has served in the drafting and the macroeconomics modeling group that worked on the National Developmental Plan from 2021 to 2025 and Nigerian Agenda 2050. Dr. Olopere has published widely in his field with experience working and consulting for various international and local institutions in the areas of economics, finance, and data modeling. He is the author of the book, Nigeria in Figures, a social economic data book, with detailed information and analysis of Nigeria's social performance at the national, regional, and state levels since 1999. Thank you, Dr. Olopere, for joining us today. It's always and has always been a pleasure for your support over the years, and also having to join us for this webinar to speak about the Nigerian commodities market, aspiring opportunities for investors. Good afternoon once again, Doctor. Are you with us?
Yes, I'm here. Good afternoon to you, Mr. Ahmed Banu, and good afternoon to our CEO, and good afternoon to everybody that has joined the call. I'm very glad to be here.
Thank you very much, Doctor. So, Doctor, you can, I would say at this point, educate us and blow our minds as regards the Nigerian commodity market. Thank you very much.
Okay, so thank you very much. And once again, good afternoon, everyone. Big thanks to STL for making this possible and for the invitation. And as I earlier said, good afternoon, everyone. So this afternoon, we'll be speaking on the Nigerian commodities markets, opportunities for aspiring investors. The commodity market has a lot of potentials, and investors can benefit from many of these potential. So outline of my presentation, after the introduction, I will speak about the global economy and the global commodities market. I will talk about the Nigerian economy and the commodities market. We'll look at selected commodities performance, their calendar, and how they performed in the last 2-3 years or 3-5 quarters. We'll look at the outlook on commodities markets, and then go to the issue of the day, which are the opportunities for aspiring investors in the commodities market. A major issue around commodities is ability to look at the risk and how do we hedge them. Then I will try to conclude. I hope I will be able to do that in 30 to 35 minutes. As a way of introduction, there are many investment opportunities for us as financial investors, or sometimes even as real investors. We can do things around equities, we can do fixed income instruments like bonds and commercial papers. We can do exchange traded funds or other mutual funds, and we can do options for some of us that may be relatively more sophisticated and when those things are available. In addition to this, commodity also provide popular investment options for portfolio diversification and for us to be able to hedge and earn better return, especially when we consider inflation as well as volatility that we may see in other asset classes like equities. If you look at the World Bank, one of their projections is that the quantity of commodities consumed globally has increased over the last century, and that has been driven largely by population growth and income growth. And most commodities traded in agriculture, such as wheat, sugar, maize, cotton, cocoa, and we also have energy, and they are done through forward future options markets and sometimes through spot markets. If you also look at Nigeria, there are many opportunities for us to invest in commodities, and that is one of the reasons why we are here today. So, global economy and commodities markets. IMF just a few days ago just released their World Economic Outlook for April. The one released earlier was in January. There was a revision in January, but we just have the April one, which shows that the world economy that did about 3.2% in growth last year is likely to do the same 3.2% this year and 3.2% next year. Advanced economy growth are still very low, from 1.6%, looking at 1.8% by 2025. But when you consider an economy like Nigeria, which did about 2.9% last year, we are looking at about 3.3% this year. Some have argued why the major revision were at least projected to be about 3% some months ago. Now we are likely to be about 3.3% this year. And that's the projection that we have, the recent projection. In terms of commodities, we can see that the latest conflict in the Middle East has raised geopolitical risk for commodity markets, and that has always strengthened causing destruction in commodity production and export. And this is driven largely by global oil demand outlook. There is concern regarding potential supply constraint, which should be stemming from the ongoing OPEC cut. Natural gas prices in the United States will also decrease by about 13%, while European natural gas increased by about 5%. Agricultural prices increased in March, with cocoa prices reaching over $10,000 per metric ton by the end of March. And this is due to lower than expected output in Côte d'Ivoire and Ghana, which are the world's major producers. Nigeria still has a lot to do in cocoa. We used to be very big there, but a lot of things are happening. If you look at energy prices, they increased by 2% in March, and that was led largely by coal that did about 5.9%, natural gas 5%, non-energy prices gained about 2.3%, agriculture gained 2.9%, beverages gained about 14%, raw materials 1.9%, fertilizer that is declined by 2.3%, metals rose by 1.4%, which is driven largely by nickel and tin, which did about 6.7% and 5.2% respectively. Precious metal increased by 6.8%. Nigerian economy and commodities markets. The Nigerian economy, our GDP growth rate, 3.1% in the last quarter of 2024. If you look at that, we have actually done, 2.7% in the last quarter. When you compare that with what we did in 2022 quarter 4, which was 3.1%, that means even though we closed the year at about 3.1%, our GDP growth in the last quarter of 2023 was lower than the last quarter of 2022 by about 0.36 percentage points. Inflation rates currently in March are at 3.2%. If you look at March of last year, when we were at 22%, to us that time it was a very high value, but now we are seeing something very high or relatively higher. And if you compare the two values, inflation now is about 11.16 percentage points higher than inflation that we had in March last year. Crude oil price has increased by about 10.38%. Official exchange rate, even though it has depreciated about 63%, parallel about 40%, but we know that sometimes around April, we actually had, around February, we actually had parallel market rates going to over 1,800, but we have gained in recent time, thanks to the intervention by the central bank, especially in trying to pay some of the backlog that we are holding. And that has had positive impact. Petrol price has increased about 157%. Our total public debt has also increased from 46 trillion to 97 trillion. That's about 110%. So we can say largely that the Nigerian economy is still battling with the problem of low growth, high inflation, a depreciating currency, even though it's improving in recent time, and a rapidly increasing debt. The central bank has tried to increase NPR, increase CRR, and just about a day or 2 days ago, tried to also reduce the loan to deposit ratio in order to curb inflationary pressure in the country. So the expectation is that going forward, if the impact of what the central bank has done is positive, we should be able to see lower inflation rates. And that's a big expectation. Outlook on the economy, IMF is projecting that we'll do 3.3% this year. The president is looking at us doing about 1 trillion economy by 2030. Therefore, if we must touch $1 trillion economy by 2030, we need to grow beyond all these 2%, 3%, 4%. We must grow, if not in double digits, but in a high single digit level. Our growth going forward will still be driven by agriculture. We have a lot to do in construction, services, especially trade. CBN is reviewing minimum capital of banks and there's a 2-year compliance window which will start in April 1st, 2024. Nigeria will be expected going forward to have bigger and better banks that will be able, possibly, concentrate on financial intermediation, which is the primary role of the banks, and then that can also present investment opportunities to investors, especially when the banks are trying to raise capital. Government is going to spend a lot of money this year, planning to spend about 28.78 trillion. And when you combine that with all the states of the country that are also trying to spend about 16.14 trillion, then we have something close to 45 trillion that's going to be spent by all the tiers of government this year. So we also expect that commencement of Dangote refinery will have positive impact on the economy by increasing the oil production, if we want to supply Dangote, for instance, and also making sure that the refining manufacturing subsector or the refining subsector in our manufacturing sector is also boosted so that we can have a higher GDP from that side. And that can also have a positive feedback effect on other sectors of the economy. The Nigerian commodity market is currently experiencing an increase in trade volume, indicating increased investor interest in diversification. So people are buying commodities now, they are investing in commodity. Of course, that's one of the major factors also contributing to that is the fact that when your currency has a lower value, relatively lower value, your goods then become cheaper to outsiders. So you then see Nigerians or exporters in Nigeria trying to take our commodity to our neighboring cities because those ones can easily buy our goods because our currency is relatively cheaper than the way we used to be about a year ago. Nominal value of Nigerian commodity market is projected to reach about $416 billion in 2024, and that is going to be driven largely by energy products, industrial metals, then agriculture at 86 million, and precious metal at 29 million. And then the compound growth rate is about 2.11%, and then the value of Nigerian commodity market is expected to reach about $452.5 billion by 2028. What are the things that we import largely? Because we are talking about opportunities. And one way to look at opportunities is say, what is it that we import? Maybe we can get local substitutes for them in terms of commodities. We later look at what is it that we export. That also shows that there is market for such things, and then we can look for a way to export those things. According to the latest NBS report, if you look at Q4 of 2023, our major imports are vehicles, aircraft, and their parts. Because the limit to which commodities can work there will be to the extent that we can work around metals, which are also commodities themselves. The other product that we import are mineral products. That is largely petroleum products. The vehicle, aircraft, and parts constitute about 40.48% of our imports. Mineral products about 24.11%. Then the other things that we import. But we also see that we import vegetable products, which are about 3.7% of our imports. We also import prepared foodstuff, beverages, about 3.59% of our imports. So if we look at it, we can say that there are opportunities for us in vegetable products and prepared foodstuffs because they are also a significant portion of what we import as a country. For instance, in that quarter, vegetable products alone, we spend about 522 billion naira in importing vegetable products, 505 billion naira in importing prepared foodstuff and beverages only in Q4 of 2023. Imagine if such can be produced locally, the kind of opportunity that is available for us as investors or practitioners in those areas. What do we export? Largely, we export mineral products, which is crude oil and gas, and that is about 91.9% of our exports. But are there other things that we export that can be useful? Vegetable products also, we exported 266 billion naira worth of it in Q4 2023. That's about 2.1% of our export. Then product of the chemical is also something very interesting. Now that we may be having a Dangote refinery producing things, byproducts of crude oil, many of them can go into chemical production, and then we can see opportunity in export. To make money, export is very important, especially for a developing economy where our currency is currently depreciating, despite whatever we are doing on them. What are the top agriculture exports? Sesame seed. That's the major agriculture produce that we export, followed by superior quality cocoa beans, soya beans, standard quality cocoa beans, flour and maize or soya maize, and the rest. These are also areas where we have opportunities to play as investors. What do we import? We also import wheat, we import moths, not roasted, mackerel fish, and then fractions of palm oil. So if you look at it from the export side, there are opportunities for us to produce and export more. If you also look at it from the import side, there are opportunities for us to find local substitutes to what we currently import. If we spend a lot of money on wheat, on moths, on fish, and on palm oil and its fractions or derivatives, it then implies that if you can produce them locally, you can actually be substituting for what others are really looking for. In other words, there is huge domestic market for those commodities. Let's just look at some commodities calendar and their performance. Maize, for instance. On a quarterly basis, global prices of maize decreased by 7.74%. And this may be due to the ongoing harvesting under maize condition that is happening in Brazil and Argentina, which are having favorable conditions. Of course, if you have favorable weather conditions and you have increased production, prices are expected to fall. According to the USDA, maize prices are expected to decrease by 8% and 4% in 2024 and 2025. But when we look at local production, FX is projecting that despite the estimated 7% increase in production volume, the price of maize will surge in Nigeria by over 25% compared to 2023 average, which then implies that there's opportunity in maize production in Nigeria. And this is going to be driven largely by sustained high demand and relatively low initial stock level. I mean, people that are having feed for their animals are also trying to struggle. So maize is a major source of investment opportunity for us. Wheat. Global wheat prices fell by 5.6% quarter on year and 26.68% year on year. And this is likely driven by supplies and strong competition among exporters. And we are likely to see a further reduction in local in wheat prices. And it's also predicted that in its May report that Nigerian wheat production will increase by 42% between January 2023 and 2024, between July and 2024. When we look at rice, global rice prices are 28.78% higher year on year. However, it fell by 4.81% quarter on quarter. And this is due to the ongoing harvest in Vietnam and lower international demand for rice in Thailand. In the world rice market, global production is projected at 513.7 million tons. However, the World Bank is predicting that rice prices will remain high into 2024 if India maintains its export restriction. I was just told recently that prices of rice are also falling in the country because this is largely driven by foreign exchange and some ease of business in terms of how you bring things into the country. And despite the projected 4% increase in production, FX is projecting that the price of rice in Nigeria is expected to rise further this year due to its initial base price starting the year at over 400,000 per metric tons. Soybean is also another area. We are likely to see a reduced global soybean prices this year. FX is also predicting that soybean prices in Nigeria will increase significantly in 2024. This support trend is primarily attributed to confluence of factors, severe supply chain constraints, and persistently high demand. So we have high demand for many of these commodities. Even when prices are falling globally, the fact that we have short supply domestically, the fact that we have exchange rate or currency that is relatively weak, even though that is improving, and one can hope that it improves further. And the fact that our domestic production is low and we have high demand for those commodities, prices domestically are likely to increase. What are the outlook on commodities market? Energy. Widespread geopolitical tensions present major risks to the energy market outlook. And then a deepening of extension of OPEC plus production cutback might tighten global oil markets, putting upward pressure on prices. Thus, the Brent crude oil price forecast is expected to average about $81 per barrel for 2024. Natural gas are projected to decline 4% in 2024 on slower demand. When it comes to agriculture, extreme weather, especially the current El Nino phenomenon, will continue to dampen 2024 output. And this will be true for food commodities grown in the most affected areas, such as cocoa, sugar, coffee, rice, and wheat. If you look at the case of Nigeria, we said the grains price index will get to fall by 4% on average in 2024 and 2025. However, the cost of rice continues to be high to 2024. If you assume that India will maintain its export restriction. Metals, base metal prices are forecast to fall 5% in 2024 due to slowing demand. Then they are expected to rebound in 2025 on recovering global industrial activities. If you have global activity improved by 2025, then we can have more demand for metals globally. And the key risks to this pricing forecast include lower than expected demand from China and some advanced nations, as there are major disruptions to some of their exports. The worsening of the latest Middle East crisis may also potentially affect trade and therefore prices. So what are the opportunities for investors in the commodity market? There are many stakeholders in the commodity trading ecosystem, starting from the regulators, trade groups, logistic companies, processors, financial institutions, insurance companies, farmers and aggregators, hedgers, speculators, arbitrageurs, market makers, collateral managers, warehouse operators, clearing and settlement houses, agro cooperatives, and commodity exchanges, as well as brokers, merchants, and dealers. In all these areas, we have many players, of course, except for the regulators, where they have just have to be regulators. We also have several opportunities, as can be seen as we move along. Generally, in agriculture, what are the investment opportunities? Food processing is a big investment opportunity. Agricultural input supplies and machinery, commodity trading and transportation, production of improved seeds and agrochemicals, market research, those who do research for farmers and those that also want to invest in farming activities. In the case of animal, livestock, and fishery, mating, breeding, and hatching, then packaging and storage. Metals and solid minerals, exploration of solid minerals, mining and acquiring of gold, iron ore, lead, zinc, tin, lithium, barite, bitumen, coal, limestone. These are areas that Nigeria has some comparative advantage, and there are investment opportunities there. Not only in their exploration, but also in their processing and adding value to some of these metals and solid minerals. Energy, surveying, there's an opportunity there. Drilling and piping operations, crude oil transportation and storage, exploration and production of oil and gas products, production of refined mineral oil, petroleum jelly, and grease, domestic manufacturing of LPG cylinders, retail distribution, small-scale production of chemicals and solvents from natural gas, and production of solar panels. It's not enough for us to import batteries, solar panels, and be shouting renewable energy. Their production can also be productive and profitable for us as investors going forward in the country, especially as people are seeking alternative energy. So in agriculture, as I mentioned, these are just details of some of the things that I mentioned in the last slide, the opportunities that we can see in terms of investing in agriculture. This can be a lucrative opportunity in the country, especially when you consider our growing population. This is an economy that grows from between 2.53 to 2.62% per annum. That's huge. And our GDP growth is just about 500 points above that. So people will always demand for commodities, not only in eating them in the raw form, but also in using them in agro-allied industry, as well as in some light manufacturing. Sesame seed, soybean, cocoa, cashew nuts are the ones that we have seen to be growing in the country, and there are opportunities for them, not only in the domestic economy, but also in the global economy. So investing in this type of farming will be very useful. If you look at FX, which is one of the leading commodity exchanges in Nigeria, they predicted the increase in the price of major agricultural produce like maize, rice, cocoa, and sugar. Financial investors can therefore take advantage of commodity exchanges and allocate their funds to these commodities. Agriculture, a lot of opportunities are there. I mean, we just take an example of a Code Ops, which is a Nigerian company that operates a solar panel cold rooms, providing a pay-as-you-store service to fresh produce to smaller farmers and market merchants. A company is also called Soilless Farm Lab, for instance, that produce fruits, spices, vegetables, flowers, and potatoes. The facility combines what we normally call greenhouse farming with soilless farming technology. In addition, they also make use of artificial intelligence in the irrigation for precision-based farming. So some of the things that we see in Israel, in US, in Canada, in UK, some of them are already being practiced here, and some people are making money through them. We too can make more farming and see how we can make money from there. Metals. Recently, there have been increased demand for lithium, an essential component of manufacturing batteries used in electric vehicles, electronics, and smartphones. According to the World Bank, the demand for lithium is expected to triple by 2040. So whatever is going to triple in the next 15 years, imagine the rate of return on such a thing. So one can invest in them now. If there are farms, if there are sites, if there are places, investment in those things will always be there. People will always demand for commodity, especially as the world population is rising. Nigeria is richly endowed with lithium in commercial quantities in Nasarawa, Kogi, Kwara, Ekiti, and Cross River states, among others. And the federal government is also trying to encourage solid mineral sector by giving a lot of incentive in that area. And Nigeria abundant iron ore, lead, zinc reserve, and this offer opportunity for us as investors. Oil and gas, despite the challenges, despite whatever may happen in the zone where we have oil and gas, we are getting more in other places. One, two, renewable energy is not going to chase oil away so soon. So investment there is still profitable. I mean, as you see in the last, some of the slides I have shown, Nigeria still export 91% of our export are still oil-based, despite the fact that we are even underproducing. So if you look at the commencement of domestic refining capacity of crude oil, this sector is expected to remain active in 2024 and going forward. And it can be more benefiting when we look at it. Commencement of Dangote refinery, for instance, is expected to provide opportunities also to some local inputs or for some local inputs that are used in chemical and allied manufacturing. Are there things that some persons were importing before now that are derivatives of crude oil? Can we get them now locally and can we supply them? These are some of the areas that one can look at going forward. Renewable energy is always there. Rising worldwide awareness of climate change and a drive for sustainable practices, the renewable energy sector has emerged as a viable investment option for investors. Companies that produce renewable energy such as solar, wind, and hydroelectric electricity are expanding at a rapid pace. I think what we have started with is to just install this thing for people, import them, and install. But going forward as a country, we need to reach a level at which we can have people establishing companies where some of these things are produced so that we can take advantage of them. And I think government is trying to give incentive opportunity to people to play in that sector. If you also look at the recent increase in electricity tariff for Band A, and the fact that those that are in Band B, Band C, Band D, their own shall come. Nobody knows when, maybe tomorrow, maybe the day after tomorrow. This will encourage movements to alternative energy. Alternative energy may be seen the way people move from Nitel to Airtel, Econet then, to Globalcom, MTEL before that one went off, and now to Global, all the other ones that we currently have. So there will be increased demand for renewable energy. Any one of us that's also planning to do that, investment in energy is also investment in commodity, because commodity, as we said, are agriculture, energy, and metals. How can we invest? We identify about 4 ways by which you can invest. Number 1, we can do real investment. Number 2, we can do direct financial investment. Number 3, we can do indirect financial investment. Number four, that can be by derivative or by hedging instruments. In real investment, you have to be the direct participant. So if it's going to be agriculture, you are going to plant, you are going to get the land, you are going to be the one that is involved in the production of that particular commodity. If it's going to be in metals, you are going to get a license and work through Ministry of Mines or whatever, get it and do the work, and then bear the risk and find a way of minimizing your risk and get the money. But we may not want to do the real or direct investment or direct participation. We want to do financial investment. We can do that directly by looking for those that are already the direct players, the real players there. Look for them, talk to them, whatever their challenges are, give money, and then agree on the rate of return they are going to give you in terms of your money. So it's not necessarily you are the one doing it, but someone who is an expert there is doing it. But in this particular case, your money is working for you because that person is using that money to do whatever he wants to do, but you have to monitor, you also have to be interested in what the person is doing with your money. We can have indirect financial investment. What does this mean? This means that we are interested in commodities, but we are not the one that want to plant or explore, and we can't really get those people that will do it. We can then seek financial advisors, and that can also move us to the core of the financial system. STL, for instance, may be a very good vehicle through that. We can talk to commodity exchanges. We can look for if there are funds that are commodity-based, there are commercial papers that are commodity-based, there are mutual funds or ETFs that are commodity-based. We put our money, and the financial advisor is the one that will be in charge of managing the funds, telling us the proportion of our fund that is allocated to commodities, and then we can see what kind of return we are getting from that. So we don't do the stress of looking for who and monitoring. All the stress we do is just to find a good financial advisors or a good financial house that will do the investment on their behalf. Whichever one we follow, whether it's real direct investment, direct financial or indirect financial, it may also be important for us to hedge. How? We can hedge through futures, through options, through forward, and also by buying some insurance on some of our activities. It's always important to hedge commodities, not just to be open and naked, especially things can go not the way we want all the time. There are many commodity exchanges in Nigeria. Not all of them are 100% functional, but some of them are functional. NCX has been around for a very long time. FX, commodity exchange is there. Lagos Commodity and Future Exchange is there. Gezawa Commodity Exchange, Prime Commodity Exchange, and I think one or two others that have been licensed or are in the process of being licensed. These are commodity exchange. So one major thing is to see what are the investment opportunities that are available on these platforms. Talk to them, go to their website, seek financial advisory from STL and others that may be the ones that you are talking to, and then they can tell whether you should go into direct investment or whether you should go into direct production yourself or indirect investment via the commodity exchanges or via your investment advisors or fund managers. Are commodity really profitable? In one of my earlier presentations, I tried to show this slide somewhere to show that if we look at all share index, return on bond, return on gold, and return on the commodity index. We use FX Commodity Exchange Index as an example. Which one of them was able to beat inflation? And one thing that we saw was that all share index sometimes can beat inflation, but not in all the times. Bond, definitely not in all the time because bond fixed rates are always fixed. Gold, I mean, if you beat, when we have red, it means that they underperform inflation. When we have green, it means that they perform inflation, outperform inflation. You can see gold and FX Commodity Exchange outperforming inflation in many of the cases. And when they outperform, they so much outperformed. But one thing you also notice is that they can also be volatile. So what does that tell us? It tells us that over the long term, equities are very good because you would have seen periods of outperforming, underperforming, outperforming, underperforming inflation rate. So that by the time you look at it over 20, 30 years, generally you are going to, on the average, outperform inflation. But in a short term, commodities have always been found to be the one that can so much outperform. What does that mean? It means that over the long term, you can put your investment, because I'm not a financial advisor, I'm not supposed to be, STL can do that. But over the long time, one will always be interested in equities, but short term to manage certain fluctuations, commodities are very useful, especially if you can follow their seasons very well. And I think this is one of the reasons why you talk to the organizers of this meeting. Risk in commodities, price risk. You can have loss resulting from adverse price movement in the commodity. Somebody might have gone to buy rice for last week at 90,000 for the whatever rice, or 85,000. Now I've learned maybe they are 57,000 or 60,000. So price risk. Supply risk. You might think that you are going to have a bumper harvest, or you not have a bumper harvest otherwise. Weather can change and things like that can change. Natural disaster can be there. Geopolitical tensions was there. Russia-Ukraine war, disruption to the value chain, to the movement of goods and services everywhere. India may say, no rice should leave our ports, especially if it's non-basmati, and later they can even extend to basmati, and that can affect you in terms of business. So you must always invest in information seeking and talk to financial experts. Demand risk, you might think that they are going to buy, something may happen. People may think they are going to increase minimum wage to a particular level, like 150,000. They may just increase to 60,000. You may have currency risk, where exchange rate just move against you, or sometimes it can also move in your favor. But for the kind of economy where we are, most likely they move against you. But that doesn't mean that they cannot move in your favor, especially as we see currently. You can have credit risk. So in all these risks, you must find a way of hedging them. How? Always diversify your portfolios, invest in different kind of assets, different types, even with the same asset classes. If it is commodity, you may be interested in different types of commodities, not just put all your eggs in one basket of maize. You can also invest in other commodities. When it's the season of one, it may be off season of the other. Investment in the two may make you to say, in case you have unexpected supply glut in one, it can be covered by the other one, which everybody was expecting will not move in that direction. So always diversify your portfolio. It's not only in commodity, it works for almost all asset classes. Commodity focused funds, exchange traded funds, and structured products. There are structured products. So some of us are also financial advisors here. We can have structured products that have commodities as 5%, 10%, whatever in such portfolio, so that investors are well diversified, not only in fixed income and equities. We can use futures and options. I think they are starting. NGS is trying to do something, and I think they probably have one or two futures that are working on that platform. I think FX will also be working on futures and options, because that commodity futures are also very useful in addition to financial futures or stock futures. And on FMDQ, people can also do some forward rate in exchange rates. So this is also important for us to always do that. The other one is risk assessments and planning. No matter the investment you do, whether in commodities or in any other one, you must assess your risk and you must plan. Talk to financial advisors. Market information analysis, seek information always. This is also a major way to invest. You may be a company that invests in market information analysis. Give people information about weather forecast, give people information about where we are going to have importation, or where prices are cheaper, or where prices are more dear or dearer, and things like that. These are, but seek information and conduct analysis in order to hedge against your risk in investing in commodities. In conclusion, I would like to say that the ever-growing population, combined with the emergence of new economy, is one of the prominent factors that are driving opportunities in the commodity space. As the world's population continues to expand, so does the demand for essential resources like agricultural produce, energy, and metals. This surge in demand provides an attractive opportunity for investors to capitalize on the long-term growth potentials of commodities. Some key tips for successful commodity trading include: understand the market by conducting thorough research, diversify your portfolio, mitigate risk by creating and implementing risk management strategy to ensure sustainable profitability. The commodity market in Nigeria shows excellent future prospects and growth potential, whereby attempt to diversify, explore export options, and innovate technologically. Thank you very much and good afternoon.
Thank you very much, Doctor. That was very packed. as expected, very, very prompt. We thank you very much for that presentation. I have a lot of questions, but I won't start with my questions. I would try as much as possible to minimize and reduce the questions that I have. However, before we jump to the move to the question and answer session, I can see a lot of us posting our questions in the Q&A chat box. Kindly ensure that you have your questions. I'm sure a lot of our attendees have questions. Please post them in the Q&A chat box, and I will touch on them when that session commences. However, we would appreciate we would request that we go into a very short break, and we come back to resume for the Q&A session. Thank you very much.
Welcome to STL Asset Management Limited, where financial expertise meet your investment aspirations. STL Asset Management stands as your trusted partner in building sustainable wealth. With a commitment to integrity, professionalism, and innovation, we have been assisting generations of investors to achieve their investment goals. At STL Asset Management, we offer investment advisory services where experienced professionals provide sound strategies and deep industry insight. From investment recommendations to restructuring and monitoring existing investments, we are your best-in-class investment advisors. Our pooled investments cater to a diverse group of investors, whether it's mutual funds, exchange trading funds, specialized funds, or infrastructure funds. We craft portfolios that align with collective goals. Looking for a more personalized approach? Our tailored investment offerings are designed to meet your unique financial target, be it planning for retirement, your children's education, acquiring a future home, or other assets. Want to embark on a journey to unlock sustainable financial growth? Reach out to us at stlassetmgt.com or call +234 913 734 1439. You can also visit our office at plot 183, Moshood Olubani Street, Victoria Island, Lagos, or 31 Agboyi Irosi Street, Maitama District, Abuja. STL Asset Management Limited, building sustainable wealth.
Thank you very much for that very short advert. Now we would move to, I believe we can have another poll just to get a sense of where our attendees are at following the presentation by Dr. Oluokere. So we have the poll up. If you were to invest in the commodities market, what areas would you invest in? Will you be interested in investing in precious metals, agriculture, or energy commodities? Thank you very much. Would appreciate your responses. The polls are up now, or the poll is up now. Okay, we have a minute more. Can the attendees kindly respond to the poll? Just a minute more. Thank you very much. Okay, thank you very much. From our results, 63% of the respondents to the poll have said they'll be interested, have chosen to be interested in agriculture. I believe Doctor was a bit to tell us about those opportunities and how the expectations of prices in maize, rice, and soybeans and sesame seed is going to significantly increase in 2024. While 24% selected energy commodities, most likely oil and gas. There's a lot of value there too. And lastly, 13% have chosen precious metals. Thank you very much for answering the poll. Now we will move to the Q&A session. I can see a lot of questions coming in. I would start with my question. Apologies to the attendees. I just need some sort of academic response from the doctor. So, doctor, we've seen. I hear you say this. You said this severally during your presentation about one key benefit of investing in commodities, which is inflation hedge. Based on empirical study and from the academic standpoint, we've heard that saying consistently. My question to you is, do we see this also playing out in the Nigerian commodities market? Do you see that possibility or that opportunity that investing in the Nigerian commodities market would also present hedging capabilities against rising inflation? Is that also present in the Nigerian commodities market, based on your experience, sir?
Okay, hello, can I just go straight into that?
Yes, sir. Please go ahead, sir.
Can you hear me?
Yes, sir. We can hear you now, sir.
Yes. So, Okay. So I just tried to share. I just tried to share a slide that I presented. So this slide. So let's just explain that hedge, for instance. Hedging means that if inflation moves in one direction, you can have something that can help you move in the other direction. So inflation is going to remove your wealth. Hedging will be what can compensate you for what inflation has removed. So if you look at the chart that I'm showing on the screen, it actually shows that anytime there is green, that investment outperform inflation. Anytime it's red, inflation rate is higher than the return on that investment. So having said that, if you look at a commodity index, for instance, like this is an index, like FS commodity index, which is a local one. So that talks to your points of, does it also hold in Nigeria? You can see that we have periods of green, we have periods of red, but the period of green appears larger than the period of red. So what does that mean? It means that commodity is a good hedge against inflation also in Nigeria. So to your point, yes, it works for Nigeria as the same way it works for other countries. But the only thing we also have to be at the back of our mind is that one should not just put one's money somewhere and go to sleep. Second point is that the fact that something doesn't work for you as a hedge today doesn't mean that it cannot work as a hedge tomorrow. But over a short to medium term, commodity will work as a hedge to inflation also in Nigeria, the same way it works against inflation in other countries of the world. I hope that answers your question.
Yes, sir. Thank you very much. That definitely answers my question. So it means that a key benefit for investing in commodities in the short term is to ensure that, or the benefit that it would provide that wealth that has been eroded by inflation. So I'll move to some questions from the attendees. So you had mentioned, and thank you very much, Mr. Disun Veracruz for this question. So the question goes, for the indirect investment, what are the pros and cons of providing equity and debt financing to direct players? I believe there was a slide where you mentioned the various methods of accessing the commodity market, and you had mentioned indirect financial investing. So if we choose the indirect financial investing route of accessing that market, what are the pros and cons? What pros and cons do you see to that method? Hello, sir. Can you hear me, sir? Sir, you're on mute. We can't hear you.
Oh, yes.
Okay.
So I'm back off. Thank you. Okay, so as we said we said that if you do indirect, you invest through like a commodity stocks, right? So like a commodity, you invest in a commodity stock. So I just want to get whether the person was actually talking about doing a direct investment or indirect investment.
So
in
it was
real investment.
okay,
Go ahead.
It was more on indirect. So he wants to go to indirect financial investment route, and he's asking for the pros and cons.
Okay, so if you go through indirect, so our understanding of the indirect here is that you are, let's say STL has a fund, and that fund is commodity oriented, or STL is saying this mutual fund has 5% commodity exposure, or FS Commodity Exchange or Lagos Commodity and Future Exchange says they have this product that is backed up by commodity. So the investor doesn't really care. It doesn't go into the nitty-gritty of the way the market works. It's only interested in the financial investment. So if you're interested in financial investment, so your due diligence is to ensure that whether STL or FX or Lagos Commodity and Future Exchange do their work well, and the kind of return they are promising you. Of course, you don't promise return if you are legal, but at least historically, you've been able to see that they have been able to give certain returns that you think are satisfactory to your own cost of fund. And then you look at their documents and say, okay, these guys are going to, I believe them, or they are regulated and things like that. But when you now come to the issue of pros and cons, whether you do equities or the rest, it's not going to really be in terms of equity, because the equity thing works more when you are doing a direct financial investment. Because that one, what you do is that you are able to identify a life practitioner, a farmer, or somebody who has a license to mine. Then you buy equity into his company, or you also give him loan, and then let's say that is a bond. Then we can then discuss what are the pros and cons of equity. Generally, equity, you are a part owner. If he has an oil license or mining license in Oyo State or Nasarawa State, and you have already bought into it and is unable to get any gold or anything from there, you also bear the cost. But as we know, if it's bond, he has to pay you your rates, your coupon at the appropriate time. If he doesn't, there are legal issues against it, whether he's able to get whatever he wants or not. The fact that he's doing exploration can make the coupon to be relatively higher. It's private sector, corporate bond, there will be a premium on it. Secondly, the fact that you may also have other risks with commodity that can also add another premium to it, such that at the end of the day, your rate of return has to be high. Otherwise, you will not invest in that person. But if it is indirect financial investment, that means you are more concerned about the financial advisor. You are more concerned about the asset management company. You are more concerned about the fund manager, or you are more concerned about the commodity exchange. And they have to be those that are regulated by the Securities and Exchange Commission, for instance. And you also have to check the historical performance of the fund into which they plan to invest your money. I hope that works. Thank you.
Thank you very much. Thank you very much. So it's, if I get you right, it's more around on the the medium at which you are going through, if you are going through a mutual fund or a fund manager or the exchange, or you need to understand the activities and the strength of that fund manager or that asset management firm or the exchange that you want to invest through. Against, and also understanding their capabilities regarding their ability to invest in commodities, against having to stress yourself around understanding what the price of Sesame Street seed is going to be today, or sodium or maize. Thank you very much, sir. Sir, I have an interesting question here. Thank you very much, Confident. Bill Blinkson is actually attending this webinar from Ghana. That's a fantastic one. Thank you very much for that. He asked a question: what opportunities does factor provide for commodities trading within the sub-region? I would like to have some more details on this.
Okay, so I know he's probably talking about AFCFTA, African.
Yes, AFCFTA. Yes.
Okay, sir. So what does that say? It tells us that Africans don't trade among themselves, right? We trade with Europe and the Americans more than we trade among ourselves. Maybe less than 10%. I think it's between 5 and 15%, depending on how you are looking at it, of trade of Africans are done with other Africans. Weirdly. So we buy things from other countries outside Africa and we sell our things to countries outside Africa. One of the major problems, or one of the major drivers of that is that the history, the colonialism mentality is always there. The trading routes are done towards people that colonize us rather than among ourselves. Another major issue is that we almost all produce the same commodity. So would I sell my cocoa to Cote d'Ivoire and Cote d'Ivoire sell its own cocoa to me? Most of us produce the same thing. So the world probably see us as a commodity or as a raw material region. But what AFCFTA is trying to do is to encourage us to trade among ourselves or trade with one another, which is very useful. So what opportunities do we have here? The opportunity here is that the other countries in Africa, or if you start with West Africa, let's say, okay, you are in Ghana, so West Africa. If I were to be you, I'm going to sit down and work on something called Comtrade data. Comtrade data, or WIT. WIT is a World Integrated Trade Services. It's a database of the World Bank. Then Comtrade is also a database of the United Nations. I'm going to say, what are the items that are imported? What are the commodities that are imported by Ghana? And from where? So I can see source and use. What are the commodities that are imported by different countries in West Africa and from where? Then I can look at in Ghana, this thing that Nigeria is importing from Brazil, we produce it. So that's the first thing. That's why one of the major things we have identified today is market analysis, information system. And I'm sure our financial advisors and the rest will also be investing in that. Once I'm able to know that this thing that Nigeria is buying from Brazil, Ghana has it. I'm also interested in how much are they selling the metric ton in Ghana. Then the next thing for me, if I can see that we have it, they are buying from another place, AFCFTA now gives me opportunity to sell to Nigeria in a manner that will be easier for Nigeria to buy than Nigerian buying from Brazil. How? Through tariff reductions. There are preferential treatment that will come from me as a Ghanaian selling into Nigeria that somebody in Brazil may not enjoy under the AFCFTA. So if I then see that, I can then say, wait a minute, this thing in Ghana, it is $10,000. In Brazil, it's even $10,000. But a Brazilian has to pay 12% on it before he sell to Nigeria. Me, I just have to pay 2% under AFCFTA. Then I'm making 10% profit. I'm therefore more competitive. So in summary, what I would say is that more of analysis, looking at commodities that we consume in this our region and the sources of those commodities. And then looking at other places within the region where AFCFTA covers, that those things are produced and what benefit do they derive because they are members of that agreement or free trade area that I can sell to them, benefits from it, such that others outside Africa will not benefit, therefore conferring on me a higher level of competitiveness. I think that's the way FCFTA can assist us in this regard. Thank you.
Thank you very much, sir. All I hear from your response is competitive advantage. Understanding the market, finding where we can find the same similar sources of commodities within the region, and trying to ensure that we promote that outlet significantly. Sir, I have one question here, two questions that I would sort of put into one because I can see that these two questions sort of align. It's around information gathering. You had mentioned in your presentation around sourcing for adequate information, and based on our understanding of investing, information is very key. So I have a question here around is there a medium or a source where we can get information around the prices, regarding past information, regarding the commodities that are available within this market? Thank you very much. It's from an anonymous attendee, and I can see also Mr. Femi Oguntuashe has also asked questions regarding that.
Okay, so thank you very much. So information. Without them, we probably will not do well. I will just identify about 3 ways we can get information. But the first I would say is that the fact that we don't have enough information shows an investment opportunity. I've worked with a couple of guys before, at different times and different countries or different places, trying to say, how can we set up an agriculture or commodity information system? And I know some guys that are making money through it without necessarily advertising for them on this platform. So one thing is to say it's an investment opportunity also. Whatever you are looking for that you can't see, it also shows you that you can fill in the gap. That is the first thing I would say. Number 2 is that commodity exchanges, as we have more and more of them. For instance, if you want to know prices of stocks now, you go to the Nigerian exchange. It's easier. If you want to know the price of some bonds and some commercial papers today, you go to the market, you go to FMDQ. If you want to know the prices of some unlisted public companies, you go to NASD. So commodity exchanges that we currently have, as I showed you, you can visit some of them. Some of them have reports and they have prices. Some of them even have indices that they have constructed on commodities. Please look for them. They are very useful as starting points. You may not get all, but it tells you how to start first. In fact, sometimes they too use other sources like World Bank peak sheets, some IMF work, or Bloomberg. You also follow their sources and then see the one you can get freely and the one you can pay for. That is the second one. The third point that I will raise is that those that are in asset management, you see, sometimes as an individual, to invest in information gathering can be expensive for you, except you are a big organization. So what happens is that investment advisors sometimes, or asset management companies, as STL and others can do, they can gather information. They can spend millions of naira in gathering the information, but because they are servicing several persons, it will not be cheaper the way they will take such information to people. So that is the third source of information. And it's also a client call to some of the organizers of this to say, what kind of information can we make available to people so that they can see the opportunity to invest via us into the commodities market? Thank you.
Thank you very much, sir. We take the feedback very well, and we'll look at areas where we as asset management firms can also provide information to our clients, our prospective clients and investors regarding information on the commodities market. Thank you very much for that feedback. Sir, I have one question here from Mr. Kunle Alugu, and it goes, where does value chain fit in the Nigerian commodities market? And are there investment opportunities in this area?
That's a big question, because the value chain, end to end, there will be the value chain there. It depends on what this person is interested in. If you take maize, for instance, it may start from a seedling company, it may start from a fertilizer company, it may be a logistic company, it may be the farmer, it may be an off-taker, it may be an aggregator, a merchant, it may be storage provider, a collateral manager, it may be somebody that buys and processes, a processor, it may be somebody that just buys and stores and resell, it may be a forward contract writer. You may also be somebody who then produce it into something and store as a pre-processed maize. You may also be somebody who process for food, or who process for something that Nigerian flour mills can buy. And like that, or somebody who buys the raw materials, the shafts from it, and use it for other things so that you can convert the waste. So the value chain is large. You may also even be somebody, because I saw one question, you may even be a company that says, our work is to provide security for farmers on their farm so that bandits cannot carry them. It's not. I mean, if you are to be in US, I'm sure there will be businesses in that regards to say, instead of all these guys guiding us in the city, you have special ability to guide people in the bush. It can be anything in the value chain. So it depends on you. It may also be somebody providing information, or somebody who gets information from them and say, bring your money, there's an opportunity in this aspect. So the value chain is so wide and long. It depends on where you are comfortable with, and then where you think the rate of return is able to meet your requirements with enough information. And you have tried and you have gathered enough information and you're thinking. So it depends on you. It depends on your resources. There are some of them that require a lot of resources. There are some of them that require small resources. There are some of them that you can start small and scale up. There are some of them that you can't scale up. You just have to do a big thing and do it once and for all. So there are opportunities in that value chain. The value chain is just end to end. So one person cannot finish it. You can start from somewhere and do backward integration. You can do forward integration. You can dip in wherever you are. So it's wide. Good luck, sir.
Thank you very much, sir. It's a very big pie. You decide where you want to cut it. That's very interesting. And regardless of which area of that value chain you want to position yourself, you will always see investment opportunities and value there. Okay, to my next question. It's not going to be my last question, but my next question is from Yusuf Bulus. So it goes that part of the challenges direct and indirect investors in agri-commodities are faced is multiple hurdles, bureaucracy in brackets, around exporting from Nigeria. Some have ended up losing their goods completely owing to long delays. What is your advice to would-be investors in agri-commodities? Sir, and before you answer that question, it also relates to I'll add a bit of my own question that I have here, which is regarding exporting, because I can see exporting as the core of this question. How has exchange rate, the appreciation of Naira that we have witnessed in the last few months, how is that a deterrent to exporters in Nigeria? Considering the fact that, as Mr. Bulus has also mentioned, there are a lot of hurdles that you need to cross in order for you to say you want to pick cocoa or you want to pick a particular commodity in Nigeria and export it to our neighboring country or even the final destination.
Thank you very much. It's a very big question that only government can answer this type of question. And I will explain. Because some of these hurdles is very difficult for an individual to remove them. And we will not be truthful to ourselves if you assume they are not there. Or if you just try to motivate people and say, yeah, go ahead and do it. I think I will approach it from two ways. I will say first, as much as we can, we need to always shout about this kind of issue and let our government see that. You see, one major reason why you devalue a currency or why you say your currency must have its true value is that you believe that it's going to incentivize people to export and discourage imports. There are two things it does. That's what the theory tells us. It encourages exports and discourages imports. That is from the current account side. It has a different impact on the financial account side. On the current account side, if government, our dollar naira was 460, 4 something before. Now we find ourselves at 1,600 at the time, 1,500. Fortunately, now maybe around 1,200 and thereabouts. But even the 1,200, 1,250 is far higher than the way where we used to be 1 year ago. What theory tells us is that people would like to export now more than a year ago. But if by the time they get to the port, it's not easy to export. By the time they do all sorts of, that means the country just devalued the currency for fun. Or the country just say, I'm more concerned about the import side so that my people will not consume imported items than how they are concerned about their people being competitive to exports. So as economists, as financial advisors, some of us on this call, we need to be shouting this in and say, as we are devaluing, also ensure that it's easier for producers to export. So I think that's one solution, which individual may not be able to solve, but individual can shout about and let government see that doing one without doing the other is like a bird flying with one wing or one hand. The other parts where I'll try to answer is that we are exporters or producers, it may be good to form ourselves into associations. You know, sometimes just operating in silos separately may not be very useful to us. Through our trade associations, so that what are the requirements? Can we get people that can help us satisfy all of them together? So that things that they are requesting for, you pay 10,000, I pay 10,000, everybody pay 10,000. Is it possible for 10 of us to pay 10,000 that we can share the cost? And if people don't come together, the big part of what I just said, now because it's the second point, but it can be divided into two. The big part of it is that we are financial advisors, we are professionals, can also start organizing people and looking at opportunities and say, I can become an aggregator. So commodity exchanges try to do that, to standardize things so that it is easier for them because they are institutional and they can easily push forward more than a single importer or a single exporter. So by coming together, whether as umbrella of a trade association or under a financial planner or a financial advisor or a commodity exchange, we can have a single fund through which we can engage government and solve our problems together simultaneously before we can export. But there's no doubt about it. We need to do something about the way we export it. The president just launched a single window system a couple of days ago. But I can remember single window for the custom. I've done some work for International Trade Center and WTO on single window as far back as 2013 or 2012. Nigeria has been on it for more than 10 years or 15 years. So sometimes the president will launch it or will come back. So we need to do something seriously about the way we are ease of doing business and how people can export it. Otherwise, Benin Republic, Ghana, all the other countries, it will be easier for them to export. And they will take advantage of the SCFTA more than Nigeria. Their goods will come here, but it will be difficult for our goods to go there. So I think it's more of a government issue, but we can do our own advocacy at our own individual and corporate and association and group level. Coming to the question of exchange rates. So, as I said, devaluation will encourage people to export, but don't forget, I was on a meeting and the Minister of Agriculture was there and I said, we said we devalue currency, people are now trying to export our commodities from West African region, and we now call them they are unpatriotic Nigerians. That when we have food shortage, people are now exporting it. But they are responding to incentive. When you devalue your currency, people will want to export. So what you need to do is to talk to those people and say, guys, we know that you are responding to an incentive because devaluation means that our goods are cheaper. You should export. But please wait a minute. we can compensate you because of the crisis we are having, but not to look at them as if they are doing something wrong. Because the day you will need them, they will not be there. But the rule is, devalue your currency, your people should be able to export your commodity. So if they are exporting it, then produce more so that they can export. Thank you.
Hello, sir. Okay, you're back, sir. We lost you. We lost you for a bit.
Okay, I don't know what
okay,
I said,
sir.
but I just said we just need to be more productive so that we can export more.
Okay, thank you very much, sir. And my last question to you, so that we keep to time, is majority of us on this call, or rather in this webinar, are retail investors. And I know that you had mentioned the various methods for us to invest in the commodity markets, but I just want to seek your advice to say how best, or which of these methods would you advise retail investors to make use of in investing in the commodities market?
So, can you hear me now?
Yes, sir, we can hear you.
Okay, I would say that retail investors should just start with indirect financial investment, because we may not be experts in planting or cocoa or maize, and we may not be able to directly identify people that are there so that we can give them our money. So what we can do is to get investment advisors, is to get asset management companies who have commodity as part of investment portfolio or asset class. Then we should study them, look at their capacity, look at their historical performance. They too should be able to show us those things, and then see how we can get exposure into commodities via them. Then over time, as we become bigger, we can go and open our own farm ourselves, or get our license ourselves, or look for people that are practicing there and give them money, buy an equity or do bond with them. But as retail investors, the safest, the same thing works for equities. The safest is indirect investment through financial advisors or through fund managers like STL, not containing STL and others on similar ones, but it's very useful to consider it that way. That's what I would say. Thank you.
Thank you very much, sir. Thank you for the response. A summary of your response is, for we attendees that are retail investors, kindly reach out to your asset management firm. Kindly reach out to us at STL Asset Management, and we would provide guidance as regards how you would navigate the Nigerian commodities market. So once again, Dr. Afolabi Oluokere, we thank you very much for this session. It's been very educative. It's been fantastic. And we would take this webinar to a close. However, before we close, we would like to have the closing remarks from Mrs. Fumi Ekundayo. Thank you very much, ma'am.
Oh, wow. Am I audible?
Very well, ma'am.
Okay, excellent. Indeed, time does fly when you're having a truly impactful and engaging conversation. Thank you so much, Dr. Oluokere. It feels like we shouldn't end the conversation, but unfortunately, we must keep to the time that we had committed to. From all indications, I mean, ours is a very volatile economy, and the ability of investors to navigate the investment landscape successfully can be a tricky one. However, with adequate information on how to navigate in a very careful and safe manner by using viable alternative investment options, I believe that as retail investors, we'll be in a better place. And of course, with the topic that we have delved into today, it's very obvious that the commodities market has been proven over time to be a very viable and veritable alternative investment option. Not only to hedge, but to also be in an asset class that's less volatile. So I think it has been a very interesting conversation. And to even think about the different opportunities that also abound within this space, you know, agriculture, energy, precious metals. There's so much to actually look forward to in terms of looking at each of these sectors and then areas that we would love to pitch our tent to also add to our portfolio. It was quite intriguing to see agriculture taking the lead in terms of how the significant number of the participants this afternoon viewed the different options. It's been very interesting, you would agree with me. I want to thank Mr. Olokere, Dr. Olokere again. That doctor did not come cheaply, so my apologies, Dr. Olokere. Thank you for your very robust and enlightening presentation, and also the very practical way that you have handled all the questions that have come forward from our participants this afternoon. We truly appreciate you, and we look forward to further beautiful engagements like this. To my colleague, the Managing Director of STL Asset Management, our very able moderator for this session, Ahmed Olaitonbanu, well done, and thank you very much for making the webinar a very seamless and interesting and engaging one. I'd like to also appreciate the technical team at STL, whose efforts has ensured that we enjoyed a seamless and itch-free webinar this afternoon. It's been a very smooth one. We had very little or no technical itches. So great job, guys. Well done. The entire team at STL. Our biggest appreciation goes to each and every one of you for being a part of the series 10 of our webinar series. I believe it has been a worthwhile engagement for you. Whilst we look forward to hosting you at our future webinars, we remain very available and delighted as always to provide our professional and expert services as you navigate your investment journey. We wish you a beautiful afternoon. Thank you so very much again for joining us today. Thank you and God bless. Ahmed, over to you.
Thank you very much, Mark. And thank you very much to the attendees. Just to give a quick roundup, the webinar recording and the questions and answers will be circulated to all attendees after this session. Thank you very much once again, and do have a fantastic day.
Welcome to STL Asset Management Limited, where financial expertise meet your investment aspirations. STL Asset Management stands as your trusted partner in building sustainable wealth. With a commitment to integrity, professionalism, and innovation, we have been assisting generations of investors to achieve their investment goals. At STL Asset Management, we offer investment advisory services where experienced professionals provide sound strategies and deep industry insight. From investment recommendations to restructuring and monitoring existing investments, we are your best-in-class investment advisors. Our pooled investments cater to a diverse group of investors, whether it's mutual funds, exchange trading funds, specialized funds, or infrastructure funds. We craft portfolios that align with collective goals. Looking for a more personalized approach? Our tailored investment offerings are designed to meet your unique financial targets, be it planning for retirement, your children's education, acquiring a future home, or other assets. Want to embark on a journey to unlock sustainable financial growth? Reach out to us at stlassetmgt.com or call +234 913 734 1439. You can also visit our office at plot 183 Moshood Olubani Street, Victoria Island, Lagos, or 31 Agboyi Irosi Street, Maitama District, Abuja. STL Asset Management Limited, building sustainable wealth.